Hey guys, my name is Nicolette Bashile. I'm also known as The Financial Buddy. Welcome to The Financial Buddy TV. I'm having to redo this video again because at that one video, my lace was lifting and the video just cut prematurely. I don't know what happened there and I do apologize for that. However, I'm doing this video for the second time and the video is all about how potentially some dealerships may be ripping you off when it comes to the interest rates that they are offering you. Let me explain, right? By the way, I'm not trying to vilify dealerships. I think they're doing a great and fantastic job. Well done to them. However, this information is absolutely needed so that car buyers are well aware of what might potentially be happening. Now, please remember, none of my videos constitute as financial advice. If you are looking for financial advice, please speak to somebody who's certified and registered with the FSCA. So in the last couple of weeks, I've been getting tagged on these car financing deals that people have where there is ridiculous interest rates that are being offered to people, right? And it made me remember a story a couple of years ago. I had a partner and he went out looking to buy a car, right? So he got to the dealership and there's a couple of things that when we discussed this, we realized, oh my goodness, these guys are very good at playing mind tricks with you. First and foremost, when you get to the dealership, on the floor, there's a car. Or maybe they've got it in their lot, it's on their system. You sit there with the car salesman and you tell them what it is that you want. And usually what they do, or usually if you're seeing the car, one of the biggest first things you will see is the big price that they've put there. But that's never the final price of how much the car is going to cost. But the crazy thing, and I want you to remember back when you bought your first car, and if you are still going to buy your first car, keep this in the back of the mind. The salesperson never or rarely speaks in the final amount. They'll speak in terms of how much you may pay in installment. There's always an assumption that you're going to finance the car and you're not buying it cash, right? So they'll speak about, this car, you'll pay 3,800 every single month. And that's why we always give the tip to say, when you're going to buy a car, unfortunately, I don't think in South Africa it's possible for you to do a pre-approval on a car. However, you can play around with the calculators and kind of get a sense of how much car you can buy based on your budget, right? But essentially, go in there with a non-negotiable budget in terms of how much you want to pay every single month, factoring in the fact that you still need to pay for insurance and you still need to pay for petrol, right? So if you know your budget for all of those things is 6,000 Rand, it means that you need to make sure that the car is coming in at 3.5. Just so that you can make sure that you've got enough room to breathe for insurance and for petrol, depending obviously on how long or how much you drive in a month, right? So those things are very, very important, right? So the car salesman will speak in that, and then you will agree to say, yes, I want to buy this car. Then they send you to what is called the F&I. So going back to the story with my partner, he walks into the F&I office, and the F&I is the finance and insurance specialist, right? So these are the guys that are going to give you financial advice on the day because they're going to sell you financial products or services. So very, very important to know that they are heavily regulated, right? Granted, now they're going to go into the office and they're going to start trying to put together a deal for you, right? They're going to put together this deal for you and then they're going to go to the banks to try and see if they can get the deal that you are looking for. So they'll play around with some numbers, right? They'll also start offering you products or added things, extras, neon xenon lights. I don't even know what they're called. They'll add things like car tire insurance. They'll add things like scratch and dent, paint and dent, all sorts of different types of extras that they may potentially offer you. And if your car is out of service plan, they'll probably offer you an extended warranty or whatever it is called, right? So you're going to get those types of things that are going to be offered to you. So I always say at this point, stop, breathe, because we have a very weird relationship when it comes to people who look serious, who look like they are professionals, who have a certain skin color, who also are a certain gender. We have various weird relationships with them. Sometimes we don't even know how to say, no, I don't need that. No, I don't. And that's why I always say, go with someone who understands these things so you don't find yourself wanting, right? Especially if you're a first-time buyer, because some of these things, you're just excited about getting a new car. Then they add all of these things, and all of a sudden, the car that was advertised at 158 shoots to 200,000 Rand, right? So that's why it's very, very important. Sharp. Let's say now, F&I specialist has got all of your documents, your credit score is in front of them, every single thing they've got them, they're sending it to the bank. Now, My partner, going back to that story, comes back and says to me, the bank has approved my loan and they've offered me 13%. And he's like, Nicolette, I know my affordability. I did the calculator. 13% just feels like it's weirdly high. I mean, this is a couple of years ago. I think the interest rate was still at like 9%, the prime lending rate. He says 13% just feels weirdly high. I said to him, okay, if you think it's high, go back to the dealership and tell them you want a better interest rate. So he goes back to the dealership, has a conversation, and the F&I specialist is like, listen, this is actually the best that we could have gotten for you. Other banks were coming in at 15%, others were coming in at 16.5%. So the 13% is actually the best that we can do for you. What he did was exceptionally incredible, because he then said, okay, please give me the offer to purchase and let me go to the banks and try and see what I can do to get a better rate. And I kid you not, he went to the bank with his offer to purchase and they gave him 11%. That is 2% minus what the dealership was offering him. So what could potentially have happened here? I want you to think about it. Car dealerships, their job is to sell you cars. They have marked up all of those prices and they've given you all of these extras, and your 158,000 Rand car is now sitting at 200,000 Rand. You think they're going to go to the bank and get you a deal on the 200,000 Rand. They're going to come back with an interest rate that the bank has offered you and Bob's your uncle. But no, they're not going to leave it at that. Why should they? Why should they just take the 200,000 Rand financing, make some money off the fact that they've probably marked up that car and it's more expensive than it should be, and leave it at that? They will never do that. Why? Because there's an element that we don't think about, and that is the fact that dealerships are actually loan generation service providers for banks, right? So yes, you are going to the car dealership to buy a car. But in reality, they also have a very secondary and probably very much more important service that they offer the bank, and that's to generate loans. And obviously, if I work in vehicle asset finance and I'm a head of department, I am going to go and sign up different types of dealerships. Why? Because they're going to become my salespeople. They're going to generate loans. So I don't know if you've ever watched a couple of my videos a couple of years ago when I told the story of how I became the financial bunny and how a bond originator kind of screwed me over on a house or home loan application. You would think bond originators have a specific job. They need to go and originate a bond for you. Car dealerships should also be called loan generators because that's exactly what they also do. So now, if I work in a bank and I head up the vehicle asset finance, of course I'm going to incentivize the car dealerships to get me and bring me as many loans as possible. So what actually happens behind the numbers or behind closed doors that we might not know? Methinks that there are different types of incentive levels that are given to different types of dealerships by different types of banks. Now, the question is, when you put in your loan application through the F&I specialist and they go to the different banks, which loan are they going to come back to you with? The lowest one, where they get the least amount of money? I don't think so. Okay? I don't think so. So what is it that they do? Essentially, what most of these dealerships do is a little thing called interest rate markup. Basically, the bank offers you 11% and they come back to you and they say 13%. That 2% is a margin that they will actually make for themselves. And the banks are okay with this because at the end of the day, the bank got their 11% loan and you have essentially signed on it, but the dealership also makes 2%. So you may think, but 2% is very small. So I ran the numbers on the West Bank calculator, right? And I worked it on 13% and 15%. So there's a 2% difference, right? If you're buying a 200,000 Rand car at 72 months, no balloon payment, no deposit that you are putting, your installment on 13% is 4,108. On 15%, it's 4,323, I think, if I got the numbers right. Now, that may seem like a small variation to you, but over the years, 72 months, it will actually accumulate. And you see it in the total cost of credit. Because on the 13%, all of a sudden, your total interest that you will pay over those months is like 89,000 plus, right? 89,000 plus, right? And then on the 15%, it's almost 105,000 rand. That's a huge difference in terms of how much money you could have saved had they given you a lower interest rate. But why this is also important is that generally for many people, this rate is always a variable rate or a linked rate. So if something happens and the Monetary Policy Committee decides to hike up the interest rate, which is what we saw over the years in the last 12 months or the last 18 months, right? In South Africa, we saw the interest rate gradually being hiked up. It also means that it will change how much you end up paying. So let's assume you started off at 13%, right? Or 15% with a markup of 2%, or 13% if they were originally going to give you 11%, like my partner. You could end up being at 16, 17% in terms of what the interest rate is on your car financing, simply because the interest rate has been hiked up. So it's very important to understand these things. So let's not just give you the doom and gloom. What can you do about it? I think the first thing that you can do about it is at all times, try before the F&I specialist goes to go and try and get a loan for you, try and go on your own. If you have a banker, try and use your banker. Now, the disadvantage of using a banker, and I've done this and I've gone down this route, is of course the banker is going to try and get you a loan from their subsidiary company. So if it's FNB, it's probably going to be West Bank. If it's Nedbank, it's probably going to be MFC. If it's Standard Bank, they're probably going to go to Standard Bank Vehicle Asset Finance, right? So it's also important that you take what the banker comes back with, because they need to come back with a good deal for you, and you then go to the other banks and try and see if you can get a better rate from the other banks, right? Very, very important. The second part is, if you do get a deal from one bank, again, you take that to the others. The other thing you can ask is you must ask the F&I specialist to show you what were the results from each and every single bank. Because there's obviously some sort of commission structure that is going on between banks and dealerships, right? So there's a thing called, as I was reading, there's a thing called a bank rate, and then obviously that's what the dealerships will then mark up. So whatever the bank has given you, the dealership marks it up by 2, 3, 4, 5%. So it's important to know what was the original bank rate that you've gotten, so that you have a clear understanding of what you should have gotten from the bank. For me, it's not. I know that it's not illegal, and I know that people end up signing their own car financing deals while they are sober-minded and they know what they're getting themselves into. We assume they know what they're getting themselves into. But my biggest gripe is the fact that it is not disclosed to the consumer. You should be told these types of things and make a decision based on the fact that you know. Because, as I already explained, most of these are linked rates. And the moment it's linked to the economy, linked to the economy or linked to the repo rate, it means that if that repo rate gets changed and the prime lending rate goes up, it means that your rate is also going to go up. So